welcome everyone. Hello, and this is Custody 3.0, intriguingly titled The Future of Digital Assets. We've got a lot to talk about. We've got some great people here. Before we dive in, I'll do a really rapid fire kind of set of introductions. My name is Ian Allison. I cover what you might call institutional crypto and enterprise blockchain adoption for CoinDesk. I've done for the past 4 years. And I will pass it along to our panel, maybe start with Alessio next.
Sure, thanks, Ian. Alessio Quaglini here, CEO and co-founder of Hex Trust. Hex Trust is the Asian leading digital asset custodian. We have over 200 institutional clients, over $5 billion in assets under custody, and operate with offices in Singapore, Hong Kong, Dubai, and Europe.
Jihan, do you want to go next?
Sure. Thanks again for having me. Jihan Xu, I'm the founder of Kinetic. Kinetic was the first blockchain and crypto venture capital firm in Hong Kong and one of the earliest in Asia back in 2016. We've invested in over 230, 240 companies to date, and we are also investors in Hex Trust.
Lovely. Peter?
Hey everybody, Peter DeMeo from IBM. I'm responsible for our digital asset infrastructure globally, and I've been doing this since 2018.
Nice. And last but not least, Dwight?
Yeah, thanks. Hi everyone. Yeah, it's Dwight Vanden, managing partner at BCW Group. We're a DLT-focused strategy consulting firm and tech development shop that works with Fortune 500 companies, corporates, on their various DLT initiatives, as well as building out our own Web3 products. We're obviously a client user of custody services, so happy to be here tonight and sort of talk about that perspective.
Lovely, thanks all of you. Okay, well, this area of digital asset custody, which is the safekeeping of the keys that control digital assets, is it's become a really exciting, rapidly evolving sort of space. We've seen a lot of M&A activity in the last year. We've seen some companies with very high valuations raise a lot of money. And just maybe a good way to just start talking about the market is, why you think this might be the case. I'll start with Alessio again.
Thanks, great question. I think there's been an increasing interest in digital asset custody, mainly for a couple of reasons. The first one is really that in the last few years, and maybe especially in the last few months, we have seen the first real use cases of blockchain in the real world that people can experience, right? So we've seen the DeFi, we've seen use cases in the Metaverse space, but also in the luxury, in the art collection, in the transfer of IP and digital asset ownership. So all of these things really put the focus on, okay, there was a infrastructure that has now become a legacy infrastructure, and all these new services will be running on a new infrastructure that is probably going to be, for a large degree, blockchain based. And digital asset custodians will be the foundation of this new digital asset infrastructure. The second reason, I think, is that as more institutional investors, central banks, asset managers, insurance companies enter the space, obviously the bar for digital asset custodians has been progressively set at a much higher level. This means that it's not just about safekeeping the assets anymore, but it's about doing it on a 24/7, 365 basis. You have to do it with a very high reliability, scalability of thousands of transactions, not even per hour, but per second sometimes, the highest level of securities, and you have to do all of the above in a regulated and compliant environment. So we've seen all of these investments being poured into the space because investors know that if you want to build this type of very sophisticated infrastructure, you will basically need to hire the best talents in the space, and you will have to make the necessary investments to make sure that your infrastructure is up to the challenge that all of the players in the industry have at this point in time.
Yeah, no, indeed. I mean, it seems quite febrile. You know, there's particularly last year. I don't know, Jihan, from a VC perspective, is this still a hot ticket? Because custody is something. I mean, you guys are the ones propping up some of these large valuations.
No, we prefer to get in early and let everyone else prop them up for us. But from our perspective, I think that custody, it used to be kind of like a boring industry, like back, maybe 3-4 years ago. It just wasn't as kind of sexy as like the latest ICO or the latest, kind of layer 1 or DeFi. But now I think it's a natural maturation process of the entire ecosystem, where the mainstreaming of the crypto industry requires that the new parties that are coming in, whether it's institutions or sovereigns, they obviously have kind of processes that they need to follow and protocols and standards. And so they need regulated custody. They need, counterparties that can stand up, like a Hex Trust or like, other custodians in the space. But the other side of it is that the mainstreaming of crypto means that the size of the assets that are being held can no longer very safely or very reliably be held just on a hardware device, on a personal hardware device. And so you really need a scaled solution, and to be honest, a solution that can scale even well beyond where we are now. If we all expect, Bitcoin to get to $1 million, then it's going to take, a custodian with, very serious backing and very serious kind of rigorous technology and processes to be able to kind of hold that and scale with the size of the crypto economy.
Right. Yeah. And Peter, I mean, I for one was really, excited to see IBM publicly. I know you've been doing lots of stuff behind the scenes, right? Just publicly come out and saying we're going to be looking very closely at digital assets. I mean, IBM's done a ton of great work on the enterprise side, building out enterprise blockchain stuff, and I know CoinDesk were really excited too. I mean, IBM has wrote the book in key management. I don't know if you want to talk a little bit about where you guys are entering this and the partnering that you're doing and so forth.
Sure, thanks. Yeah, I mean, we've obviously been in the blockchain permission side since 2016 when we, with digital asset open sourced Hyperledger Fabric, and quite frankly, we've continued in the enterprise space, working in various interoperability protocols like Weaver and tokenization engines and things of that nature. So there's a whole lot of interest. It's still with consortia blockchain, hasn't died, although everyone seems to think it has. But at the end of the day, there's going to be various permutations of quasi-public permissioned, as things evolve, especially as we move into CBDC implementations. So IBM in general is kind of like broadening the interest with respect to digital assets from just straight up permission, Hyperledger Fabric blockchains into, digital asset infrastructure is what I do, and then beyond that, possibly, into other areas as well. Like we're very interested in the whole NFT and gaming sector, and there's internal some initiatives out of research and others that are looking at all of that, Metaverse wallets and things. Also, a lot of work done in RegTech, actually, fraud detection and blockchain analytics. And we have on the hardware side, we recently released a new version of our Z16, and it has on chip fraud detection capabilities that will actually determine whether or not fraud is being committed real time before it actually finishes. It's insane. So you could use those kinds of technologies for doing blockchain real time forensics and so forth, for AML checks and things. So I think in general, you're seeing probably work being done across a lot of CBDC efforts as well. I think that's another big area that we're interested in. And then obviously in my space, in the infrastructure side, we're trying to push the envelope with respect to the safe handling and safeguarding of digital assets themselves, in ways that's using combinations of proven technologies, because you want them to work. At the same time, integrating new concepts that we think has a future, and if done correctly, is the future.
Really great, really great. And Dwight, as a BCW consulting, you're working with all sorts of different areas, and we talked previously about tokenized assets, existing assets, tokenized securities and stuff like that. I know you got all kinds of stuff public as blockchain stuff as well, but people often talk about the cryptocurrency, the pure bearer asset side. Maybe this tokenized security stuff is really interesting as well. I don't know if that's something you can talk about. Yeah, just whatever you think.
Yeah, yeah. I mean, if we were to sort of give some sample data from our side to Alessio's point of the massive sort of increase that we're seeing in the market, every week we're seeing new prospective clients come and talk to us, looking for information on how to integrate crypto into their business processes or what they're doing. Probably at least once a month, one of those is going into a massive deep dive around sort of properly integrating it end to end, from liquidity sourcing all the way through to red tech, as Peter was talking about, because obviously that's a big concern for corporates. And a lot of those deep dives are by challenger banks, settlement banks, these types of people that are actually starting to really sort of explore the space. I mean, we can talk about it now because it's public information, but one of our marquee clients, WorldPay, that we've been working with for 3 years on card work and strategy, just announced earlier this month that they'll be basically allowing for the settlement of USDC across the rails within their gateway, through to various different merchants that are interested in accepting that as a payment method as opposed to a fiat currency. So from a custody perspective, that obviously means they sort of come and say hey, we shouldn't be doing this by ourselves. Who should we be working with to sort of provide this component? So that's obviously huge. On the other stuff you were talking about sort of tokenization, I mean, yes, it's definitely a need, but it's a little bit of a two-body problem. So obviously we do a lot of work in the securitization space. We work with one of the biggest law firms in the world building a security tokenization engine. And part of that is building out the ecosystem of what is actually at play when it comes to creating securities. And obviously a big portion of that is being able to purchase them. And obviously when you're purchasing them, you're purchasing it with obviously cash of some form. And unless you're digitizing that component of it as well, then you've obviously still got friction points within that sort of, I guess, flow of an asset rather than just holding a digital security. You obviously want to be able to exchange it across a digital cash leg, and so having a DVP, delivery versus payment method, available to that end is also a huge component. So we obviously are working with a lot of institutions when it comes to that type of things. I mean, recently with one of the big European banks, doing some work around syndicated loan projects with DLA Piper tokenization, but also bringing in CBDCs and digital tokens in order to facilitate payment legs. And obviously custodians like Hex Trust are super important for those components.
Yeah, I mean, on that note, someone's just dropped a question in the chat. Can any asset be digitized as a token? Probably speaking, yes is the answer, probably from a blockchain perspective. So yeah, great stuff. Well, look, stepping back a little bit, before we talk about custody 3.0, which is just an intriguing sort of idea, custody 1.0, custody 2.0, how did we get here? And my understanding is that, custody 1.0 is kind of like self-custody that we started with Bitcoin, and then moving towards maybe even simple cold storage. You've got takes manual processes to get, it's buried in a mountain in Switzerland, all your Bitcoin or something like that. And then moving into this custody 2.0, which is I mean custody 2.0, custody 3.0, we're in this kind of transitional phase probably, but some of that involves these complex technologies, like multi-party computation is a good example. It's a sort of fashionable technology where the keys are sharded and distributed and so on. And another area is that we're probably going to touch on is the use of hardware security modules, which are kind of tamper-resistant places where keys can be managed. So I don't know if you guys want to start off going through and talking about some of these, these new technologies and what they brought to the table. I don't know who wants to go first. I know, Peter, you've got some views on multi-party computation. I don't know if you want to go first.
Sure. Look, I think multi-party computation is definitely an evolutionary step to kind of where things need to be. First of all, what is it exactly, right? There's different ways to. Well, first of all, what are we even talking about? We're talking about a private key. A private key is sort of like the foundation of everything around custody, right? It's the ability to sign transactions, verify transactions. As they say, not your key, not your Bitcoin, right? And if somebody has access to it, if they can just copy it, game's over. So there's a higher fiduciary responsibility for custodians to look after, private keys, because they can't be, once they're gone, they're gone. Blockchain transactions don't come back, right? So it's a lot harder in general to custody a private key. Now, in doing that, there are different ways to do that, right? You mentioned custody one, which is like self-custody, use of hard wallets, ledger treasures and things of that nature. And certainly the ethos of cryptos is all around self-custody, right? So, and anyone who suggests that it's otherwise probably going to get slapped by crypto Twitter. That said, as institutions get into the market, it's less likely that you're going to have asset managers walking around with treasures and ledgers on their hip pocket, and plugging into MetaMask to go access their DeFi platforms, right? So you need something else. So you need third-party custody, and then third-party custody will offer different approaches, to looking after the private key. So traditionally, it would be if you will, a whole private key, if you will, and that is encrypted, stored someplace, typically in a hardware security module, which is a dedicated device that's used to generate, store, verify, and sign private key and transactions. Another way to do that is to take that private key and slice it up and put it in four different public clouds, using a technique called Shammer secret sharing, right? And then when you want to do a signing, you can kind of bring them back into a single place, sign, and away you go. Then there is, again, on-chain multi-sig, I should mention, which is blockchain protocol specific. So that's going to have, it's a multi-sig transaction on Bitcoin. You can have multiple people actually hold their own individual keys. Each has to sign, and then the transaction goes. But I would say the latest and greatest, and it's probably using the word fashion is not it's not really appropriate, but it feels like it sometimes, is something called multi-party computation. And the idea here is that individuals, let's say 3 parties, would each sort of generate and hold their own portion, if you will, of the private key, right? And then they can authorize a transaction, typically in some kind of quorum, M of N, like 3 of 4 or 3 of 5 or 5 of 6 or whatever, and they authorize the signing of the key, and then a protocol will be able to, through math and various communications and orchestrations, be able to then create a signature without actually reconstituting those key parts. Okay, so everybody holds their own, they sign on their own, okay, and using zero-knowledge proofs, the protocol will then sign. Now, that's helpful in a number of ways. For one thing, you don't have enough key material with any one particular party such that they could go assign the transaction maliciously, right, or collude for that matter. And as a custodian, being able, like Alessio with Hex Trust, they could offer MPC. I think you do offer MPC, and that provides the ability for Alessio's customers to take part in a transaction, for example, right? So now they know that Alessio, they don't have to trust Alessio because they have a say, they have a part of the key, right? And that's super important. So that way, it takes care of the risks that regulators ask about with respect to, do you have full control, of the key and so forth. So that's all good. And typically, if implementations that are out there today, if you have, let's say, 3 parties, it works pretty well. But once you scale out to more than 3 parties, it gets a little bit more challenging. It gets a lot slower to actually operate. The generation of the keys themselves is a little bit more difficult. And then, of course, you have to manage these things. Like, look what happened to stakehounds and fireblocks. Not to pick on anyone, but you have, in that case, a 3-party. You have, let's say, stakehounds, which is staking, had one part of the key. Another part was held with a trusted third party. Another part with fireblocks, and the key that was with fireblocks was on a development server, which got wiped out. it was $80 million later, So the problem there is that, this is all new technology, and you need to be able to operationalize it in such a way that, those kinds of things, aren't really going to happen. MPC, also, if it's, what we're seeing actually in talking with large banks is, on one hand, they really want to do MPC. On the other hand, they're asking for all the shards to be co-located, in essentially one data center. So it's like, what's the point, right? If the root of trust is in distributed key material and then you co-locate them all, then what's the point, honestly? The other thing about MPC that is something, because it is new, relatively in the context of digital assets, there's been a number of discoveries, if you will, of mistakes in the protocols themselves. Most recently, Trail of Bits published a blog on April 13th that talked about essentially the underlying zero proof paper itself. Okay, that was the foundation for Plonk and ING and Bulletproofs and other implementations. Well, guess what? There was a math error, and everyone just kind of like, because they're engineers and they're not cryptographers, they just simply coded it as it was, right? And then once it gets compiled, how do you even know there's something wrong? So now you have Consensus, Ident, Dusk Network, Adjoint, SICBET, ING, Zengo. They all have to deal with this. Probably others as well. So the point being is that with a new technology dealing with something as sensitive as a private key, it's not all roses. There's potential bugs. There's potential attack vectors that come up. And so, there are those that would argue that there's a value for that, but then there's also maybe with the private key just holding it on to its old-fashioned, well-proven techniques like Sham or Secret, or just holding the whole key itself, in an HSM or something is good enough. So in other words, there's really no hard consensus at this moment about what is the right way to go, and possibly variations and hybrid solutions are appropriate as well. Like we have one client that using MPC for internal authorization of transactions, but the actual key itself is still a whole key, for example, right?
It's really great. Well, I'm glad we've gone right into the weeds, which is where we should be. I mean, Alessio, I know that there's, some people would probably like to have the MPC part handling their hot wallet stuff, and maybe HSM for the cold storage, the large amount of crypto that's kept that's far away from the internet, I guess. I mean, what's your take on that whole sort of side of things, MPC, et cetera, et cetera? Is it, yeah.
Well, okay, first of all, thanks, Peter, for the explanation. I think what clients are demanding today is basically flexibility, right? So for custodians, the challenge here is to collect the requirements from different clients that operate in different jurisdictions under different regulatory frameworks, some in a regulated way, some in an unregulated way, right? And to offer them solutions that meet their requirements without having different infrastructures for each of the clients that you're covering, right? Because you want to be scalable, you want to be 24/7, you want to be compliant, et cetera, et cetera. So how do we do that? I mean, Peter mentioned, explained what MPC is, right? I think MPC is a very good evolution of how we distribute trust and distribute the risk of holding private keys. But apart from that, I think there are pros and cons that come with MPC. I think one of the main pro that comes with MPC is the fact that it allows you to offer that kind of flexibility that I was mentioning before. So not all of the clients want to have a full custody solution where the three parts of the signature that Peter was referring to are actually done by the custodian or by one institution, right? Some clients want to be able to share the trust with the custodian itself. So they want to have an algorithm that needs 3 out of 3 signatures, but they want to be able to retain at least one of the three, right? Or some others, they want to make sure that maybe the custodian can sign some transactions, but others require at least one signature from the client side. And then you have other clients that, you know what, we're not regulated. Actually, we prefer to use your enterprise-grade infrastructure that has been assessed by the top audit firms and is certified and is licensed in jurisdictions. But we prefer to keep all the keys ourselves. Maybe we just give you an encrypted backup to the custodian, right? And we want to have a self-custody solution on an enterprise-grade infrastructure. So how do we make sure that we can provide all these solutions on the same infrastructure? And then MPC comes very useful for this type of purpose. At the same time, most of the regulators around the world, we're in 2022, but it's still the case, they require a big chunk of the assets that are held by financial intermediaries to be held in cold wallets, right? So, and cold wallets do not really go very well with MPC, because MPC, as Peter was mentioning, is a slow protocol which requires the connectivity between different parties that have to sign their transaction together, right? So how do we do that? So how do we integrate cold wallets at the same time within the same infrastructure that runs on MPC? And how do we allow the different types of custodies, pool custody, self-custody, and shared trust custody with cold wallets, hot wallets, MPC and HSM based on for the same client, for different clients that you want to meet the requirements for. And this is really the challenge for people like us that decide to operate in the custody space. Just one additional thing on the description that Peter went through. It's important to use the right algorithm to protect your keys and distribute the trust, but at the same time is equally very important to use the right hardware, right, to be able to keep those shards of the keys, right? And some cryptographic algorithms do not run on enterprise-grade HSN devices. So you end up using kind of lower level of security devices because you are actually using complex cryptographic algorithms, right? So it's all a balance, right? Different custodians, they have different solutions, but at the same time, I would say that the real challenge that is coming and that we need to really face reality with is to provide flexibility.
Mm-hmm. Really great. Thanks for all those insights, and thanks, Peter, as well, for your excellent explanation. And just before we get to the metaverse and the NFT stuff, I know that there's in the chat people are asking about. One last thing about this 2.0 move, and it's the emergence of licensed, regulated custodians. Companies that have gone license shopping, they've got a license in a particular jurisdiction, and as we've touched on already, some jurisdictions have, they would require everything to be on premises as opposed to sort of on a cloud somewhere or something like that. I don't know if, Alicia, if you want to talk really quickly about Singapore, you guys are licensed there. I know they've been tightening up a lot recently, and also the rest of you chime in as well on maybe what your take on the regulatory side, the licensing side. And it's worth mentioning as well, some companies are just tech providers, others are custodial tech providers and custodians as well.
Yeah, I think the regulatory piece is actually a piece that is moving very fast, luckily, but is also a very complex one. So we as custodians, we have to be able to offer the same type of service to clients that operate in different jurisdictions, and unfortunately, the regulatory requirements are different in different jurisdictions. Some jurisdictions have moved a little bit faster than others, and have put together regulatory frameworks. Now, while others have a little bit fallen behind and have not promoted regulatory frameworks for digital assets. Now, the issue is you can operate sometimes under regulatory frameworks, right, and be fully regulated, but can you be competitive with those other providers that operate in jurisdictions that are less regulated. I think it's been a question that many of the intermediaries have been asking themselves in the past, but I think the answer now is clear. Regardless of where you operate, I mean, I think the trend is clear. The main financial markets, Hong Kong, Singapore, the US, the main jurisdictions in Europe, the Middle East right now, they're heading towards a clear regulation. And it looks like all the regulatory frameworks actually converging into something very similar. I think Singapore has done an amazing job in really putting together something that is competitive, where it's clearly defined what is security tokens, what is cryptocurrencies, what are stable coins, and how intermediaries that intend, the few intermediaries that intend to really spend time and effort to comply with these requirements can actually work together with the regulator to be regulated and operate in such a growing market. We already received the first license under the Capital Market Services License Act, and we're working on the one under the PSA.
Good for you. And Dwight, would you go along with that regulation moving relatively quickly? We hear all the time about companies moaning that it's, stifling innovation and they're going to move, to some other place. What's your take on that with regard to custody specifically?
Yeah, I mean, there's definitely like regulatory arbitrage going on around those things where people are moving to jurisdictions that are compliant. I mean, obviously, to the regulatory side of it, I guess the closest area that we touch is the tokenization work that we do around security tokens, which is a little further down the road for a lot of these regulators when it does come to sort of understanding the security of, once digital issuance of assets, and then obviously, how do you actually custody and secure them versus, more bare assets like crypto and stuff like that. So obviously, Alessio mentioned the Middle East, it's been massively picking up over the last little bit. We was very interested in sort of pushing ahead forward on this. You've got a few areas like Germany, which now allows for like the digital issuance of the bonds. There's actually no paper attached to it. So there's some stuff on, I guess, the areas that we touch on that that regulators are sort of coming to the forefront on, but it's still definitely behind a lot of the crypto side of things.
Maybe before you move on, Ian, I kind of want to just jump in on the kind of the custodian 2 versus custodian 3.0. I think the technical explanations are super fascinating, and there's a wealth of knowledge here. But I think the other side of it is, what is the role of what's the kind of evolving role of the custodian? I think from what we see, having kind of invested in everything from like mining to node infrastructure to custodians like Hex Trust, I think what we see is actually the line of what defines a custodian is starting to break down, and I think that custodians are starting to kind of evolve into the way that banks evolved. A bank used to be a place to, secure your cash, your kind of funds. And then it started to evolve into financial services. Then it started to evolve into investment services, et cetera. And I think that's actually where custody is actually going. And to Alessio's point about needing flexibility because of the needs of the customers to not only just, safe keep the assets, but to use the assets, whether it's for staking, whether it's for trading. There's companies like Credo that also have these types of solutions to allow, trading in a safe environment. All of these types of, use cases are emerging and evolving at a very fast rate to continue, transactions, volume, value generation, all while the assets are quote unquote custodied. So I think that not only will custodians have to continue offering services, especially in the financial side, but even with other types of assets, and I know we're about to talk about NFTs, services around consumer. If you have a Bored Ape that's worth $300,000, $400,000, that's going to be in custody, but you're still going to need to be able to stake it. You're still going to need to be able to use it for entry to a club or a restaurant. And so this idea of a dynamic and active custody, I think is probably a use a situation that's going to evolve. And then also, when you start to get into other use cases, obviously like security tokens, these types of things are large, present large value services that will also increasingly have utility. So I think that, where we go with custody is both custodians needing to evolve and offer more services, but then the other side is that you're going to have a lot of other types of companies that offer technical services or infrastructure services in the business, or even payment services that actually kind of act like custodians as well, because there's so much, customer assets that are sitting on their platform that will also, need to be A, safeguarded, and B, flexible and active. So I think there's going to be, compression and pressure on traditional custodians to, again, evolve and serve.
Well, listen, thanks for moving us into the 3.0. Sorry,
Yeah, sorry, I was just saying that, yes, I mean, completely agree. But it's really, I think in reality, all of the things that we mentioned about custody 2.0, so the technology, the MPC, et cetera, the flexibility, the regulation, the fact that you are SOC 2 compliant, et cetera, all of these things will actually be more or less taken for granted already in custody 3.0. All the custodians, they already have those things. I mean, at least the top custodians, right? So they'll be taken for granted. The real race right now is to build custody 3.0 as the universal connectivity. Exactly what Jian was saying, right? So you have a huge number of blockchain protocols. On top of these blockchain protocols, you have an increasing number of token standards, ERC20, security tokens, NFTs. For all of these tokens, you have a number of DeFi services that are being built to stake, to delegate, to rep and unwrap the tokens, to vote for the governance in the DAOs, to lend, to borrow, et cetera, et cetera. And all of these things, they will have to be provided by the custodian, right? Now, because they really demand a tight integration between the wallets that hold the assets and the blockchain smart contracts that have to interact with the wallets. Before, in the traditional financial markets, we had intermediaries that would do the additional services. Now the additional services are on the blockchain and they're connected to the wallets. And that's the challenge. How do we make the wallets available for all these services in a safe way? Now, the other challenge is that, following the analogy from Jihan, right? So banks have been evolving in the traditional financial markets. Now, the issue is that the traditional financial markets, you had a limited number of securities, a limited number of contracts on commodities and FX, right? Now, here on the blockchain, you can represent whatever you want, from a real estate to a security token, from an ape that you need to enter the club, to a bag, to an IP right, to, yes, Bitcoin, Ethereum, and all the other things. So that really leads to additional challenges to custodians to make sure that you can do a universal safekeeping service as well as the universal connectivity.
Yeah, I mean, when you talk about multi-chain, there's obviously the assets that are being moved across blockchains, which is a precarious business, probably at best, done sometimes by just a DeFi developer in their bedroom. I don't know, Peter, if you want to talk about what you see as some of the things that we highlighted already, the 3.0, all this new stuff, DAOs, DeFi access, staking, etc., and where you see, the vulnerabilities, the places where custodians might step in and help out a little bit.
I think that, custodians are the first outside of just regulated institutions to really take on regulation. And so they have a bit of a more mature outlook on things. And we talk about like DAOs and, governance of DAOs, for example, and tokens in terms of being able to look after those and set the rules. A good example is just recently with Beanstalk, that just basically got hacked for, I don't know, $180 million. And it wasn't even really a hack. And it was actually just really well thought out. I mean, here they put up two different proposals to the community. And the first proposal said, basically, send me all your funds. And the second proposal said, send a donation to Ukraine and then send me all your funds. See proposal number one, send me all your funds, right? And what happened essentially is that the clock went all the way down to the last minute, and the hacker then used a flash loan to obtain 51% of the governance tokens, right? And then was able to vote at the very last minute for proposal number 2 to go through, which of course included the donation. And sure enough, it just went instantaneously, and Beanstalk, I think was maybe is a fork off of Compound, I'm not entirely sure. But the point though is that, there are certain things like you should do, like lock your tokens up to a certain period of time after a proposal goes through, or, have only one at a time, or something to that effect. And basically they didn't implement any of these rules, or did so poorly. So, potentially a role for a custodian is to kind of oversee these sort of things, right? Is over sort of, the implementation of these, and sort of have that, a mature adult in the room kind of perspective, on these kinds of things. Another area that I agree with Alessio on is, being sort of the glue between various metaverses, cross-chain bridges. This is a whole nother, the Ronin attack. There's all sorts of ways to lose your tokens in smart contracts, right? And if we think of it, since we're going to get into Metaverse, Metaverse primarily is gaming right now, and it's the traditional gamers are the ones actually driving it, and they want nothing to do with crypto. So it'll be interesting to see how that all plays out. But irrespective of that, you're seeing, and you will be seeing, I think, platforms that will be created such that people can build their own games on top of that, and then you are going to want to be able to share your skins and buy artifacts and so forth. So the concept of a crypto wallet will just happen, okay? And then you're going to want to be able to potentially have that trading across different metaverses, and so this interoperability absolutely would be an opportunity for custody or custodian to sort of orchestrate all of that in a way that's very secure. I think last time I checked on the wallets being used for gaming systems, they were just sort of these online ones that, they probably wouldn't last very long under a very serious review. Let's put it that way. So, I think with the metaverse coming, it's only going to increase the opportunities for custody, and perhaps redefine it, as it is today, simply being viewed as, well, this is just where you keep things safe, safekeeping of assets, into such more broader, institutionalized perspectives, like we talked about prime brokerages, and what Coinbase is doing and Genesis is doing, having a whole set of services. Well, the same thing would apply for the metaverse. And then there's the insurance part, right? Which is always like, if someone puts their assets, their coins on Binance, and someone asks them, why do you keep your funds on a centralized exchange? And it's because, well, when Binance has been hacked in the past, which it has been, right? It had the SAFU. So they'll make you whole. So there's nothing to worry about, right? So, having this notion of, we're going to take care of you even in the worst case scenario as a custodian, is also something that is comforting to those that would then place their funds with that custodian. And there's no shortage of opportunities for insurance in this upcoming DeFi space, is there?
Yeah, no, well said. The inverted commas open metaverse. I don't know where we are with that right now. I know that, the games GameFi itself is in its infancy, I expect. I don't know, Jehan and Dwight, how far along the road are we with the infrastructure that Peter is talking about, to make this interoperable kind of GameFi metaverse a reality? I don't know who wants to go first.
I'd say pretty early. Just to quickly touch on it before, I just wanted to say that, I can attest to a lot of the stuff that Jehan and Alessio were talking around the custody Web3 stuff and the interaction required for various different things. We have a venture arm that does a lot of investing, And, it's a constant pain point for us. It's extremely difficult to do everything that we need to do. And I think custodians that are like at the forefront of that innovation curve of implementing a lot of those things are going to win the business of most of the companies that are out there, sort of looking to sort of interact with, this whole concept of more active rather than passive, as Jihan was mentioning. But yeah, so to touch on the interoperability and the metaverse stuff, I mean, yeah, I think it is early. I mean, we, as Peter mentioned, there is quite a lot of hacks happening. I mean, it's very much like that. This is the new place or the new weak point for attacks, like what custodians were a couple of years ago. And so, I think within the past 12 months, we've had about $1 billion stolen from various different breaches. Most of that more recently than not. I mean, you could, if you want, you could include the Poly network one where 611 million was stolen. It was sent back, but the fact that it actually got taken, in my opinion, should be included. So it's actually more like 1.6 billion. And so obviously that creates a problem. As you said before, a lot of these things are sort of developed by tech, a couple of guys in a bedroom and stuff like that, and then sort of billions of dollars end up falling into these things. And so we had the opportunity to create an interoperability bridge. We call it more of a portal. It's called Hashboard, and it interconnects a couple of different networks at the moment. It's rolling out to many more. And we looked at it very differently. We looked at it more from a B2B perspective. As corporates would want to start interacting in interoperability, they're going to want to see something different. And so, drawing on things like the conversations we've had around MPC, but also governance structures, we basically put together a council of industry-leading firms to sort of come together to be the consensus mechanism for the movement of governance across these various different networks. And we've put various different companies from different sectors in that just to sort of make sure that there's a voice for everyone. So obviously Hex Trust is on there from a security perspective. We've got Animoca Brands on there who are obviously bringing in the gaming, the Metaverse, the NFT side of things. We've got WorldPay, who I said we worked with before, who are sort of interested in using this for payments. I mean, why should it be that USDC settled on one rail versus another? We've got the guys from StableNode who helped found MakerDAO. You've got a couple of the networks like Polygon and Hedera are on there, and then obviously it's ourselves and LimeChain who co-built the solution. And so we very much see the next years as basically opening up this interoperability between all of these different networks where things are being built on different networks, and it's no longer going to be a world where we've got siloed walled gardens, but interoperability across them. And I think being prudent with security and governance from the outset is super important.
Really great. On that, with the Hashboard thing, I just wondered if it's using Hedera's consensus system, just from a custody tech point of view, is there any difference when you're using a directory cyclic graph, if I've got that right, versus regular assets on a blockchain? I don't know.
Yeah, so I guess it's a little bit like what Peter was talking about putting different portions with different people. And then effectively, Hedera has a service called HCS, or the Hedera Consensus service, which is basically a module component that's actually interlinked and worked with on the IBM side initially, because it plugs into Hyperledger, but it's now an independent service that can be used as well to basically timestamp and verify transactions. And so effectively, each of the council members hold portions of this component that then basically get injected into the core, basically stamp a transaction and say that obviously everyone agrees that this is a valid transaction to move through the bridge. As I said before, you can think of it a little bit like an NPC style of way of, I guess, authorizing something.
Nice. I noticed we're getting close to the top of the sort of 45 minutes allocated. I'll maybe grab a couple of things out of the chat here, questions that are coming through. There's a lot about sort of NFTs and stuff like that. Here's one. If you buy land in the Metaverse, what are the custody options? I don't know if anyone wants to jump on that question.
Yeah.
Well, obviously Hex Trust. Now, I mean, obviously, the land in the metaverse, I mean, depending on which land, but let's take for example, Sandbox, right? So it's a type of token that is not it's no different in kind of a technology than any other NFT token. The issue is still the same. So you can go and use the retail type of providers, right? But if you're buying a big piece of land and you're paying millions of dollars, then you might want to use a custodian. Then you use the custodian, the question is always the same, right? So the land, until you just need to safekeep it, it's fine. You put it in a cold wallet, etc. But then now the land, you have to use it to build, right? So you have to build buildings, applications, shops, anything that you want to use the land for. So you have to make it available to the developers. And at the same time, you might want to lease out the land to somebody else. So how do you do all these interactions with the smart contract? And then we go back to the same topic as before, which is the universal connectivity that the custodians need to provide. Now, the thing is, we have this amazing thing, which are custodians for institutions. And obviously, we've seen that they have resources, they've done their homework to be prepared from a regulatory and security, et cetera, perspective. But how about the retail users? How about the gamers, the online gamers for the blockchain games? What are they going to use? Are they going to use the basic retail platforms, or will they demand the same type of protection, even though they are consumers, right? You will have the apes that will become more expensive, but as well as the armors or the shields within the games. From our perspective, Xtrust, I mean, we are kind of a type of client agnostic at the end of the day. So what we are doing right now, we're building collaboration with Animoca Brands, an institutional wallet, institutional grade wallet, but for consumers. And this wallet will be fully dedicated to the metaverse and the GameFi universe. It will go live in Q3, and it is really directed to capture all this market of consumers that want to enter the metaverse, GameFi, new games, and live blockchain. But at the same time, they want to do it in a highly secure, enterprise-grade, highly reliable, and compliant environment.
Yeah, maybe I'll just kind of jump in on that, because I think this wallet is like super interesting and could be a game changer in terms of, you know, how not only the consumer but also funds and institutions think about digital assets, even beyond kind of metaverse land and NFTs. Obviously, the values of these types of assets are going up, and again, as we talked about the active custody, the ability to actually activate these assets while they're in custody, similar to the way that crypto is being done in terms of trading, that will increase. But I think that, you have to kind of think well beyond, where just the retail kind of use case. I think that, custodians will have to start thinking much more beyond just the custody and think about things like utility and different types of services that will integrate even into their institutional solutions, because every asset in crypto can and should be activated. Like the idea of a pure cold storage will, I think, increasingly be seen as just for people that are extremists. Because if you can earn, 5, 10, 15% yields on your safe kept, custodied assets, like, of course you're going to, much less if you want to participate in kind of governance votes, which you'll need to use your assets for to prove membership, in a DAO, et cetera. In the case of some NFTs, you're going to need to have access to that. So this idea of safekeeping and security is kind of where custody goes, but all very much in an active way. And that will cause this kind of convergence of a lot of different types of silos that exist now in terms of functionality, including custody.
Excellent stuff. I'll grab one last question, or I'll merge two questions together actually from the chat. NFTs, do NFTs have particular additional security concerns? This person's mentioning metadata that they create, and someone else has asked, NFTs as collateral, is there a preferred jurisdiction for that sort of activity, Asia Pacific or somewhere else? I don't know. I don't know if anyone wants to, Jehan, do you want to continue, or Alessio, or?
Yeah, sure. I mean, I think that it's still very early. NFTs are still kind of not ready for prime time in terms of institutions. I think they're starting to be. But you also have to remember that, NFTs, it's just technology, right? Like what NFTs are going to be used for is very different. So we invested in a company called Snickerdoodle, which is actually replacing browser-based cookies with user data NFTs. Security tokens will become NFTs. So the entire use case for NFTs will expand well beyond, kind of JPEGs. And I think that, for these kind of NFTs that are being used now, the jurisdiction I think the regulators don't really take it that seriously because the numbers aren't big enough. But once you start to get into things like GDPR and you start to get into things like securities, because the NFT, capsule is being used to store things that are regulated, that's when they'll get serious. And I think we're probably like a year or two away. And at that point, it's just the same regulatory hopscotch and jurisdictional hopscotch that we play now. There are, jurisdictions like, Singapore, to a lesser extent, Hong Kong, Dubai is doing really interesting things now that are just more flexible. Hard to say where the US is going to end up, especially with kind of current regulations and, the kind of frequently changing administration. So hard to say, but I think that, in my mind, I think Asia is a very interesting place generally. And also a lot of people count China out of the picture because of the restrictions on public crypto, but don't forget about permission chain and private crypto. That's going to be coming up in a big way, and our thesis is that it's going to be as big as public chain crypto. So that will lend itself to I think a big examination of Asia's role in the kind of crypto space.
Sounds like an article I need to go and research. Who else wants to add any summing up comments? Alessio, would you want to add anything?
Oh, I mean, just setting up on Jihan's and your question. So on the technology, I wouldn't really focus on the fact that metadata or whether it's a little bit. Yeah, there are some differences, but the operational process and security procedures that we implement are very similar to the ones that we use for other more traditional crypto assets. The thing is really the main point of the problem is what Jihan is referring to as the activation, so the connectivity. These NFTs will have even more activation opportunities on a daily basis for users, right? And then, so how do we, again, ensure all that kind of security and availability of the activation of the assets within a custody framework? That is going to be the main part of the challenge for companies like us.
Lovely. Dwight, do you have a last thing to say on this sort of topic?
I mean, on that particular topic, yeah. I mean, obviously we see it definitely coming, especially the way that Jihan talked about. Regulation will definitely come to them when they come to size. I mean, we've invested in a couple of custody companies that are also trust companies, obviously Trust being one of them, but also one out of the US. Because we definitely see this coming. Regulation will come and will need to be regulated. And I think those that, as you mentioned before, have both licenses and custody technology will definitely win out on this front. I think the JV that Alessio is doing with Yatsu over at Hanamwoku is definitely a game changer in the space, and we're keeping a close eye on it. That's very exciting.
Lovely. And Peter, finally, closing remarks.
Well, I think we're just getting started on all this. It's a really exciting area, and our focus is institutional custody, and you have the banks slowly finding their way to DeFi. There have been some people that have joked, in fact, the bank of the future is nothing more than KYC, AML, and custody. Everything else is DeFi. So we'll see how that all goes. One area we didn't really talk too much about is policy, and how that is really evolving into sort of a new way of actually doing anything with respect to institutional custody, and it's certainly a big topic that banks are interested in as well. I think maybe family offices, institutions probably as well. So that's one area that I think will continue to evolve, and how do you do things like, very simply, if I make a whole bunch of rules, workflows to approve a transaction, and I send this to my risk committee and they sign off on it, how do I ensure that no one's changed it after it's been signed off on? Things like that, right? Little little gotchas along the way. And so we're working on solving those kinds of problems and providing institutions with an option to actually do cold storage completely offline in a cloud environment, and looking at things like we talked about with multi-party computation, combining that within hardware security modules. So a lot of interesting tech on the horizon, and we're certainly looking forward to maybe working with all of you, but definitely with Alessio on implementing this next generation. Thank you.
Great stuff. Well, to the digital asset people out there, you're in safe hands with these guys. I just want to say thanks to all of you for your fantastic insights, and apologies if my kind of questions jumped around a little bit. I think that went really well. Thanks all of you so much.
Always a pleasure. Thanks everyone.
Thanks so much.
Thanks.
Bye.
Bye.